Traders, I trust you're all well. It's been a while. I just need to change something on my video. Apologies, I have a wrong thing on the video background, so I just speak through without it. I trust you're all well. Let's have a look at today's price action. Pretty interesting so far on Hang Seng 50. We are in a tight trading range. But I'll come back to that. Let's just look at the other markets and I'll tell you what I'm looking at. So euro versus the dollar. At the present moment, I'm doing nothing in this market. And I'll tell you why I'm doing nothing, because we're in a tight trading range. So I'm only interested in getting into this market if we break out below this level, breakout pullback, then I can jump in. Now, because we're in a tight trading range, I'm looking for things like this. I'm kind of looking for that. At this level of resistance, if I see a failed breakout by the bulls, the next day I want to look for a failed breakout and sell it. So right down here, I'm waiting to see how we're going to get there. So if I get a bear is trying to break below this and then get a tail with the market closing back within the trading range, the next day after that's happened, I'm going to look to see if the bears try and follow through and then fail and then trade back into the range. So I'm pretty selective about what I want to do this market. Now, if the euro versus dollar is one of your primary markets to trade, you ought to be in looking for opportunities. So for me, I'm only going to be looking for higher probability setups on the daily to jump into this market. So UK 100, very same thing. Because of yesterday's trading range, it's a bear candle, tails either side. I'm only interested to see what happens when the market gets to the low of yesterday or back up into the high. I'm not trading within there. There will be plenty of opportunities in that market if you trade in it, so you must be looking for it. But that's not the market I just deep dive into every day. So I'm very selective now about when to jump into the market. I don't want to be in multiple trades across 4 markets on the 5 minute. I want to be in the higher probability trades in these markets, Euro, UK. The markets that I'm looking into more intraday, that's bad. Market I'm in every day without fail is, of course, Hang Seng 50, as you know, but I'm also usually keen on gold. So presently with gold, I'm very interested to see if the bulls are going to have a follow through, break out above the high of yesterday, and to see if they're going to be able to test that high. We spoke about this, we missed a couple of sessions, but we spoke about this channel for quite a while. And we said when the market is in a bull channel or a bear channel, you have to look, if you are trading the daily chart, you have to look for trades off the bottom of a channel or off the high of a channel. Now, just by looking at what we have, the big round number that everyone is looking at as far as gold. Well, if you're a gold trader, you've got to be thinking about it, looking at it, is 2,000. That's a number that's got all sorts of influences in the market, emotionally, psychologically, structurally. Whatever reason people look at gold, 2,000 is big. But also, the all-time high up here is pretty important. This lighter green line was the all-time high. 7th of August, should be 7th of August, 2022, George. That's correct, that one. That is. So the previous all-time high on my charts was a 2075 for 2023, but we dipped over it, and now we have a new all-time high. I still have that there because, bulls tried to close above the channel, above it, and they failed. So I'm very interested to see in here if the bulls have enough momentum to break above that. And their goal, of course, would be to try and take out the high of this candle. And if they're strong, then they want to go for that. If they fail and we end up with a bear candle today, then I'm going to be looking for short to get to test the 2000 level or even the low of the channel. So pretty selective in terms of what I'm looking for. I've taken a couple of bull trades, which I will talk to the traders about, top of the hour when we go into the Wednesdays at the market. I'll show them just for time's sake. I can't go through it now. Hang Seng 50, my go-to market. Absolutely love it. If you are trading the 5-minute chart, you have to find a market that you're going to go in and trade and get to know it. And Hang Seng 50 is my bread and butter. Up early every day, 3:15 my time to trade. So first candle of the day. Well, before we do that, let me just show you on the daily. So on the daily, this is where we're at. Big bear breakout, pull back, outside candle bears wanted to accelerate down. Bulls failed that attempt on the bears. Good for the bulls, acceleration up. So bull breakout followed through. Now, always talk about that. So bulls breakout, broke out above the 20,000 level, and a good follow through after a breakout. So good for the bulls, but they failed to break out above the high of May, pipped above it, failed to break out above it. So big problem for the bulls. Then, of course, yesterday, the bears came in and failed the bull attempt. Reversed 2 candles, created a lower high double top. Problem for the bears was this tail at the bottom, but the tail is smaller than 50% of the body, so still strong bearish price sessions. So coming into the day, I expect a little bit of follow through of the bulls, and wanted to see how far the bears would go and see if they would follow this. Their measured move would take them somewhere down here. So I was looking for shorts at the open, but being aware that, bulls created their tail and bulls created their higher low. So bulls can come and reverse this completely. So jumped into the market right at the beginning. So when you trade in any open, you always look at the session to the left to have an understanding of what took place. Now, what took place leading to the open of the Hang Seng, of course, is the US session. And the price structure and the patterns created there are absolutely important to in giving you feedback in terms of how to trade. And then you got to make your decisions. First candle, right from the open, if you're watching this, bulls accelerated up, and at some point it looked that they would close above here. So it wasn't a surprise for me. Bear in mind, this is a tail that we saw on the daily. So there was bullish momentum. So you do expect some level of bull follow through. You don't know how far it's going to go. It could just keep going. But you got to wait. Big follow through. And then it failed. And the bears came in, and the bears had a good candle. Okay, so closing beneath those candles, opened up a bit. Just so that we can have a good look at it. So this candle closing beneath here, you're going to make a decision. Now, one of the things that I talk to traders about is being a craftsman in your trading. We learn in price action a lot of patterns. We learn how to trade first candles, second candles, third candles. We learn how to trade all of these things. But the market presents things to you more often than not when they're all combined. Now, typically there's nothing new, but you got to process your thinking as a craftsman. This is our craft. This is why we keep looking at charts and doing our chart analysis so that we can get on top of it. So as a craftsman, you look at it and you make the decision. You say, okay, good for the bears. I can wait for this because it's an outside candle. I can wait for this to see if I get further information, a bear breakout, a pullback, and a low one, or maybe I get an inside candle, another inside candle, create a convergent triangle. But the market is closed in a few seconds. If the tail is small, the bears are strong, I can jump into this market if I want to. And if I do that, because I'm taking an early trade or reversal trade, put my stop at the measured move level so that if the market comes back and takes out this high, you don't want to be in that trade. You get out of the market you lose half your risk and not a problem. And in any case, when you're taking a first trade at this open, like I say many times, you gotta keep your risk low, going 0.25, going a third, whatever the case may be. But you must take the trade if you decide that there's enough information provided. If you didn't take this trade, you wait. Bear breakout, that small breakout is absolutely important. There's never any noise in the market. There is information. Bear breakout, failed breakout, we have an inside candle, dodgy candle, which presents a problem for the bulls. They were strong enough to fail the breakout, but if they had been strong enough at this stage, they would have given us an inside candle. A low test candle closing above the open, closing above the open and closing above, that candle there. So we can say, okay, bulls are strong enough. Then we can still decide to take that trade. Had we had that structure, stop would still be at a measured move. But we didn't get that. If you had taken this trade, I took this trade, you leave it and wait to see what information you get. Then you get the next candle, which is a bear breakout. Now, if you are reading the price action as a craftsman, which we must do bar by bar, candle by candle, big bear breakout, and we can see, bulls tried, they failed, so the bears were strong enough to reverse all of this price action. That's the beauty of price action. The market kind of speaks to you. So the bears were strong enough to reverse all of that price action. And you can make a decision on that. Bulls tried to fail it, so we have a breakout and pull back. And now we have a low one, what we call a low one. After the breakout and the pullback, the first attempt by the bears to continue the trend. So if you didn't take that, you have to take that trade. But when you're taking this trade now, you don't have to put a measured move stop. You could do that. And the reason you could do that is, when you go into the fourth candle, this is now at past. At the fourth candle, the market is bringing for the first time 15-minute traders. So there's a bigger volume of traders coming to the market, and they might just create a failed breakout and try and fail the market. The structure so far favors a little bit more bearish price action. But if you're not sure that the market, the bulls are strong, the bears are strong enough, you can still put a stop at the measured move. It's not too far. When you see acceleration down, then you can tighten the stop. Alternatively, just start with a stop up there. Either stops is perfectly fine. So when you see the acceleration, happy days, you're waiting to see if the bears are successful to carry on. The bears failed. This is a failed breakout. Go to this low, tail at the bottom, and you kind of say, guys, if you're strong, why have a tail? Failed breakout. At that point, I said to the traders, when you see this, you can tighten your stop to 50% extension. This is the extension of the first candle up to here. When you get a dodgy, leave it there or put your stop just above that candle and see if you get a little bit more. Got a little bit more, went down, pulled your stop, get stopped out here, or tighten your stop here and still get stopped out. But it was a fantastic opportunity just to trade the market as a craftsman, and you would have been rewarded. So if you're a trade in the market, fantastic. Sincerely hope that you benefited from it. If you are in the Wednesdays at the market, to see you in 15 minutes time. Unfortunately, I got the wrong background on my Zoom, so I'm not going to put it up. My mistake with that. But we will see you guys next week, or we'll see you when you get to Wednesdays at the market. Marlon, thank you very much for hosting. And it's a pleasure to be back in the market with you guys. We will see you again next week. Continue to build your wealth wisely. Thank you. Bye-bye and cheers.